Hello traders, you are watching Weekly Forex Outlook by Light Forex, and from this video you will get trade ideas for Forex major currency pairs. Let's begin, and we start with having a look at the chart of the US dollar index. As you can see on the weekly chart, American currency made a leap to the upside last week and managed to overcome the resistance line which is connecting the highs of 2016 and 2018. American currency gained as the US economic growth unexpectedly accelerated in the first quarter. The GDP growth forecast was 2.2% and the actual reading was 3.2%. This increase was due to gains in trade and inventories, which may unwind in the upcoming months, but still we can see that US economic growth is doing better than many analysts have feared. In addition, durable goods orders surged in March and other positive figures were released in America. Slowing inflation is somewhat a concern, and today on Monday, April 29th, we'll get more data about American inflation. In addition, this week there will be the press conference of American Central Bank, the Federal Reserve, and it will set the course for the future direction of the USD. We will see how the Fed reacts to the stronger than expected economic growth figures in the United States. To check other important economic events for the upcoming days, we need to have a look at the economic calendar at lightforex.com, where you will find all the important tradable events. So starting here on Monday, inflation figures from the United States, core PCE price index and personal spending. The higher the reading, the better for the USD. You can see the forecasts are listed here in the calendar. On Tuesday, have a look at China's official manufacturing PMI. The performance of this indicator will make an impact on Australian and New Zealand currencies. And for New Zealand, have a look at ANZ business confidence indicator. Other things on Tuesday include the European GDP figures for the first quarter, the preliminary data, and Canadian GDP figures as well. Also, America will release consumer confidence figures and pending home sales, so it will be a chance to trade the USD. And on Tuesday there will be a speech of the Bank of Canada governor. On Wednesday, the 1st of May, we'll see holidays in many European countries. Also, I'd like to point out that Japanese banks will be closed during the entire week. It's a traditional holiday period, so pay attention to that while trading Japanese yen, as well liquidity will be lower. And what else do we have on Wednesday, we have labor market data from New Zealand and US ISM manufacturing PMI, so we will get further insights in US economy. And then comes Thursday, Chinese manufacturing PMI, unofficial this time, but still important and still key for Australian, New Zealand dollars as well as Chinese yuan if you trade it. And also on Thursday there will be a meeting and interest rate decision of the Bank of England. British Central Bank is expected to leave monetary policy unchanged because there is still the lack of clarity about Brexit. So some minor impact may happen from this event. And on Friday we pay attention to European CPI indexes, flash inflation data. And this is the first Friday of a month, so America will release non-farm payrolls and unemployment rate. You can see the forecast is that the number of jobs in the United States increased by 181,000 in April, and the unemployment rate remains steady at 3.8%. Another thing which will make the trade for the USD, as well as ISM non-manufacturing PMI later that day. Also on Friday we'll hear from some Federal Reserve's members, and they will clarify their positions regarding the interest rates. So this week is especially filled with news from the United States, and it may be a pivotal week for the USD, which will set the further course for the American currency and other currencies as well. Getting back to the charts in MetaTrader, we can see that for now there is something new on the chart of the euro dollar. The weekly chart showed us that last week the currency pair closed below the level of 1.12. A serious bearish development compared with the long period during which the exchange rate was above this level. And of course the bigger picture now is for the currency pair to try to get to lower levels in the medium term. The next Fibonacci level is inside. It is located just above 108 mark. If US economic data surprises to the upside this week and we get positive manufacturing PMIs, a stronger inflation data, then it would be easy for the euro dollar to get in that direction to the downside. Resistance is now provided by the previous support around 1.12, and above that we can mention the levels around 1.1215 and 1.1275. Mildly negative picture on that daily time frame, some potential for recoveries if we are able to get above 1.12 level, but a limited potential on the upside for the euro, given the fact that the European economy is in a bad position and the European Central Bank will be forced to continue its loose monetary policy. If we look at the chart of the British pound versus the USD, we will see that the pair turned to the downside after it formed the high in the area of 1.3385 in March, and the further weeks were more difficult for the British pound. Although Brexit was delayed to the end of October, now we get a long period of uncertainty, as British Prime Minister Theresa May still is not close to any kind of agreement with the Labour Party, which is opposing her Brexit plan, and even some members of her own Conservative Party also do not support her. As a result, the situation looks rather difficult. Brexit is still on the agenda, and the time is not in favor of Theresa May and not in favor of the British pound. For now, the currency pair GBP USD managed to find some support around 1.2870 on the daily chart. But there are serious doubts that the currency pair will be able to get above the psychologically important level of 1.30. And the idea is to look for sell opportunities on the recovery to this level. And the turn to the downside may bring the currency pair to the area of 1.18 1.28, 1.2780. This is the target area. And if we take Fibonacci from the advance from December lows to March highs, we will see that indeed the decline below the 50% Fibonacci mark will open the way down to the area of 1.2770. As for performance of the USD versus the Japanese yen, here we can say that resistance around 112.15 still looks serious, and despite the fact that the USD shows great performance versus other currencies like the euro, the British pound and commodity currencies, it has difficulties in gaining versus the yen, and here we need positive US inflation figures for the American currency to recover. So resistance is located around 112.15, and only an increase above that level will open the way up to 113.15 and 114 marks. Support levels on the downside below the level of 111.30. The decline will bring the pair to 110.65, where it will likely enjoy some demand and support, and finally support is located at 110 mark. So remember that liquidity in Japanese yen is lower, and as a result movements in this currency pair may be more volatile than usual. As for the dynamics of the USD versus the Canadian currency, Canadian dollar was supported recently by the bullish dynamics of oil prices. However, Canadian Central Bank last week put a hold on future rate hikes, and this is a negative factor. In addition, oil prices may correct to the downside, and all things equal, we can expect the bigger uptrend in the USD Canadian dollar to continue. Last week, the currency pair broke above the consolidation range in which it spent March and April, and now area of 1.3450 will act as support. And as long as we are above this level and above the previous support line around 1.3425, 1.3430, we regard this as the bullish situation for the pair, and will target levels around 1.36, 1.3665. Australian dollar revisited the area of 0.70. This area provided support for the currency pair for several times already, and we see that there is attempt of recovery. However, moving averages, which are located around 0.71 and higher, are still having negative bias. So likely the market players will continue selling the Australian currency on its attempts to approach 0.72 level. The downtrend, of course, has lost its momentum, but still we see that bulls are not able to push the price significantly higher, to push the price above 0.72 mark. The New Zealand dollar suffered a lot of losses last week. Now we see that there is an attempt to recover. However, a significant resistance is located between 0.67 and 0.6725. So it will be difficult for the currency pair to overcome this area. And well, if it turns to the downside, the focus will be on the level of 0.6585. Gold prices spent some time below 1275.50 level. but then tried to recover, and some scope for further increase here exists, but we do not think that the price will be able to overcome the level of 1300 as long as the USD remains strong. So here is the area to sell gold, and return below 1275.50 will accelerate the declines with the focus on 1254 level. Finally, oil, on the weekly chart we see the bearish candlestick, which allows us to expect correction, and correction may take place to the 50-week moving average around 70.15 mark, and the next level to watch will be the Fibonacci mark around 68.30 level. So despite the supply problems, it may be a time for oil to correct to the downside, because technically this is a strong bearish pattern and it will be difficult for the prices to continue growth right away. This is all for today. Thank you for your attention, and trade with Light Forex.